The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon until 1 p.m. Eastern Time. The Dow has been all over the show. It had a very sharp rally. It had an early morning sharp slide, pre-open. Then it had quite a strong rally. It rallied to the 25,306 level. A fraction, like $1.50 under yesterday's high. See, this is the exact inverse of what we've seen all year when the tide was rising. You'd have things like this where there was a pullback and then there'd be a nominal new high and you'd expect it to fail, and it stood there, it just sat there. Now we're getting nominal new lows and then it just sits there. This is the exact opposite. So what I'm looking at here is in the Dow, now it's only down 58. Let's just see what the E-mini is doing. I was showing this to the people in the den earlier on, made that cup formation right there, trading at 27.23, down 22, made a low this morning of 2703.75. And now it's had a nice run in the 2-minute chart, gone to a PD. Remember, we're always looking at that. I showed the cup formation, showed the inside wedge target line. I showed the various left side, right side price time matches. And it has until, if it's going to be able to do that, it has until, can I go one more bar? It has until that's 12:26. Let's say 12:34. to get to test the high right here of 2733.50. And if there's a break under 2720, a close underneath 2720 that holds for 2-minute bars, we'll be going down quite a bit. So this is the pattern that we look for. It doesn't matter whether it's a 2-minute chart or a monthly chart or a 10-year chart. Let's go to our story. So, for subscribers to my opening call, the techniques, we used a whole bunch of techniques, and we did go short a day after the all-time high of 26,951. We went short around about 26,790, and we used the DOG 1-to-1 short. And our target, once it started to break the 9-period moving average, and then the 14 was the 2,500 level. Now, I'm going to be doing a webinar on Tuesday night. And this is what I do for my subscribers every day. Here's a 120-minute chart. I discuss it all. And what I had said is today, if at 12:40 p.m., so we've got 30 minutes to go. Now, firstly, I gave exactly what happened, where we are, and then I say, there was a Chapman wave trend gauge that showed yesterday that there should be some kind of a sharp double-digit rally. Well, of course, after the very sharp pullback, we got a monster rally. And yesterday I was saying if we can get 65% of the decline and hold there at about 130, that'd be very good. So I say, simply put, if the 25,000 support is pierced yet again, that will continue the testing of lows, while a sudden rebound over 25,250 this week will allow for another H-type bounce to create an M pattern. So that I drew in the M pattern, right? We actually did all of that in the 3 hours we've done that, less than 3 hours. Then I said today for 12:40 p.m., if the Dow is plus 40s or more, that will allow for a rally into Thursday, but lower than that after struggling to rally and failing will be poor action. And then I have a daily chart, and I discuss the E-mini, and then anything else that is of interest to us that we have, we're looking to buy, etc. And there's one stock that we did actually buy this morning at $2.85. It hit within an hour. It hit $2.92, trading right now at $2.87. So I'm not afraid to buy. This is not an inverse or anything. This is a regular stock. It's just that in this particular period, I prefer to be going for low price to see if we can garner some action, some upside movement. I don't want to sacrifice a lot of money on the long side. and we are short. We short the down. We short the SMHs via the SOXS, 3 times short. So let's go on with this. So we've hit the 200 period moving average now. In 2 weeks, we've already been under it intraday. We haven't closed under 25,000 yet. And that's so far, that's a good sign. And so we're using up energy and some price. So more time than energy, really. But look at the weekly chart. I'm going to go through this every day for the next couple of weeks. Very important, the way we look at the rectangle formation that broke to the upside fractionally, and now we're down and testing this trend line, uptrend line. The weekly chart, MACD and stochastic are very poor. Excuse me. So now let's go. So 25,000 is really key support now, and we should, in fact, we used up so much energy to the downside. We should have some kind of a counter trend rally, and we did have a trade like that, and I gave exact, very specific specifications and a time where we could go long, which we did for a fraction of a moment. We lost 20 cents on a stock that was really would play the upside. It was a $92 stock, so 20 cents is nothing. Why did I do that? Because if in that exact moment, if that particular sell-off made a V-shaped recovery and it started to rally strongly, which is kind of what we've just seen, but we saw it twice instead of once, then that I think would have allowed for a rally into the close today. This way, it's going to be a bit of a struggle. There's a chance that we could rally, but we've used up a lot of both upside and downside energy. Hey, let's get through these. SPX.X. The S&P is down 19 at 27.21. Inside bar, it's gone to a trough E. Yesterday, went to that leg E. And both. I'll be talking about this in the webinar coming up on Tuesday night. What patterns can we expect for the coming many weeks? And then when we do turn around to the upside, what are the patterns we're going to be looking for to say, hey, now we've done all our consolidation, we're on the way up? What stocks are we going to be looking at? What stocks are we just patiently waiting to see whether or not they're going to work out as leaders in the next big move up, or whether there's going to be more time needed? So what are the techniques that we're using? Which moving average? I'm just going to give for an hour and a half, 2 subscribers. You can join. Actually, this is a really good time to be joining. Get to know my work. It's free because it's a money back guarantee. And then you get to be at my webinar. And you know, everyone knows that from my webinar, we've already started looking at the next 3 months worth of stocks that we would like to get in, what looks good, what we want to participate in, what we're avoiding. It's a nice time to do that. And I'll be discussing my seed, introducing the Chapman Wave methodology in a little bit more detail, because I've had so many questions over the last week and a half. And really what it is what are the techniques I use to get the sell signal at the exact top, and what will we be looking for to try to identify what we're going to see at the bottom. Remember, my thesis for lows is earthquake, aftershock. Internal low, residual low. Keep it in mind. Just 2 things you've got to think of when they occur is the big issue. Now, the S&P has key support at 27.15 to 27.09, and any break in the 27.42 area in the next 2 days could have quite a nice rally. Short-term rally, but a rally nevertheless. I'm a little behind here. The QQQs, we'll get to that as soon as I return. Hold tight. I'll be right back. Dow is down 53.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Chart with a cup formation. We're going to get to it in a minute here, but let me just do this for now. Okay, I'm getting rid of that. Get rid of that. Just a lot of monitors to monitor. Okay, got it. Okay, so I was asked about the dollar. We'll go to the dollar right now because I need to do a couple of things. One of the things I'm going to be discussing, and I of course, there's a lot to do in that hour and a half, but I will be discussing it, is how we're looking at cup formations and arch formations. In the cup formation, right here, what we've got is a pattern in the dollar that went to 96.99 right there. That was on the 17th. That was the week of the 17th of August. Pulls back pretty sharply. Goes to 90, just under 94, and has had a real nice rally. It's up 47 cents today at 96.46. So I was asked about the left side, right side. I'm being a little conservative here, and what I'm saying is that by November the 23rd, the dollar should get to go above 97. This is being a little conservative in the sense that I like to use the trough low, and that's 1, 2, 3, 4, 5 bars. But if you go 1, 2, 3, 4, this is the 5th bar. That would make this week, by Friday, a push into the 97s. So I'm being a little conservative. I'm saying if it doesn't do that, if there's a little minor pullback before then, and it's really, the daily is very positive, monthly is really improving, and this weekly is, right as we speak, is about to cross positive in the MACD, but it hasn't done yet. We've got to wait until Friday because it's a weekly chart, but the stochastic is rallying. So there's a good chance that we might be able to quite soon. And if that's the case, then we should do it by Friday or Monday and break into the 97s. So that's the dollar. And commensurate for subscribers, we've been long since 90.07. That was back in April. That was the 6th of April via the UUP. And the question is, in the UUP, I wonder if I can do it a little easier because sometimes I have, yes. So the UUP has a slightly different chart. In fact, I should have done that straight away. UUP is a trading vehicle. I like to use the root, but in this particular instance, you can see that it works much better because we went to a slightly lower low the week of the 28th of September. That gives me 1, 2, 3, 4, 5, 6 bars down, and 1, 2, 3, 4, and the high was right there at 25.67, and lo and behold, today's high is 25.66. We are 1 penny away from hitting it, 2 pennies away from breaking to a new high, which I would have to consider to be probably a leg B. So let me just do this so you can see what we're doing here. A new parallel right there, click. And it says by 3 weeks time, 2 weeks time, 2.5 weeks time, by the 9th of November, we should be breaking to new recovery highs. So that's that. Now, I'm not going to do the monthly chart right now. We've got a lot of time. We've got a lot of stuff to do. I'll do that. I'll do it in my own time, and then I'll show it to you. But the monthly chart is saying that within another, I'm not even going to do it. It's just saying it's acting extremely well. Let's see what happens. So that means we're now in leg D in the daily chart of the UUP, C, DDs, where you've got to be a little careful. And let me see if that corresponds to the dollar, because I was so busy I forgot to look at the dollar. Leg C. So it's one behind, and that this is the move right here that was, in fact, parallel highs. 94.37, 94.37, 94.40. So those two parallels could become a phantom peak. I have no need for it. I'm calling it leg C, and it's very positive. Okay, that was a lot of work on the dollar. Let's look at the EUR-USD. The euro-dollar currency pair. Is it pulling back? No, it isn't pulling back. It is plummeting. It is down 0.68% at 1.139. Been talking about this arch formation. Remember the fight between the arch and the cup formation? In this particular instance, the arch is winning, and this is not a good sign. I've not been positive on the euro-dollar for ages. It's down 0.07 at 1.139, and the USD JPY, I bet that's struggling as well. Yeah, it's down at the lower end, making a potential Chapman wave H pattern. I'm going to be talking about the H pattern this coming Tuesday night. Remember, Tuesday night, 5 o'clock till 6:30 Eastern Time for subscribers, and you can sign up. I have to tell you, this is just a fantastic time to be getting a heads up, because we do it live every day in the show, and then I also do it for my subscribers. We're looking, using the Chapman wave count, using the techniques. Those are all the things that we do, because I want us to be on top of everything. The tide has turned, and it's just a matter of where this monthly chart is going to close. Look, if we went to the S&P, look at the QQQ, struggling, down 250 again today. It did not make a new low at 167.80 to break a penny below the trough C that was made about 9 sessions ago. Instead, it's holding quite nicely above that, but it's making an inverse pennant formation, or the arch formation. All I can tell you is if there is a close on the daily chart below 168.82, I think not only will we go through 167.81, the lower of the 11th, I think, 11th of October. I think we're going to go quite a bit below it. That'll start leg B down in the weekly chart. And look at that monthly. Look at that candle. I just don't know how anybody can say that, at least for now, the tide hasn't turned. Yeah, I think the tide has turned in the daily and the weekly charts to the down mode. It's in sell modes. But that monthly chart, this is the first aggravation we've seen since back in intraweek, the first week of February, back in 2018, where we went to the low. It broke under the 9-period moving average. This time we're holding for quite a bit under the 9-period moving average. Looks like 166 is the 14-period moving average target for the QQQs. Getting a whole bunch of questions. Let me just do this. I did that. Oh, IWM. IWM is, look at this candle. Right through, with no mercy, just splat. Right through the 9-period in the monthly, right through the black, green, right through the uptrend dashed, major uptrend line in the monthly from 2000, from February low of 93.64, the February low, it goes to 173.39. Gosh, that's a lot in just a year and a half. It goes up 80 points. It goes up almost, what is it, about 86% or something. And now it's given back a huge chunk. It's at 149.88. It better, and it's at a lower low. Here it went to a trough E. If there's no new low today, and the MACD and stochastic are very poor, it's getting close to at least an attempt at a bounce, but it hasn't taken any opportunity whatsoever. IWM, just be real careful. Okay, gold did that. No, I didn't do gold. I want to do gold right now. So now gold, look. PEG, with all the conflagrations going on in economy and world affairs, you remember that little wick to the downside, that very broad rectangle formation, then the wick to the upside? Well, we snuck above it. The wick to the upside, this is about the area we should have gone to, 1241. Well, what did we do? Yesterday we went to 1243, round number, and we're pulling back just a little bit. Gold, can you believe it? Every once in a while, gold and the dollar hold together in the same direction.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So we're back and we're looking at gold. So gold, if you see this on the Chapman wave projection chart, these project, the green is the resistance and the cyan color is the support. You'll see that in the daily chart, 1234, a lot of resistance at 1243. All the way there. A break above that says, hey, it's kind of open for a little while, because then you go to the monthlies, and the monthlies have 1282. Okay. Now, if you're looking at the 120-minute chart, We've got support at 1230 to 1231. And we've broken the 1228 resistance, so this is going to be key. It's hanging around there at 1231 right now. So it's just hanging at support. If it breaks under it, then what happens is there isn't all that much support once you go until we get to 1221. So I'm watching this very closely, and I think it's because of the world affairs that are going on right now. Money is going into gold, but it's not really a breakout, not yet. At some point, I think it will, but I'm not sure if this is going to be the big break for gold. It's just more like a fear factor. So I've got this now as a peak D. If there's no new high, MACD is holding well, but it's starting to in the process of arching over. Stochastic is good at 82%. Weekly chart has improved a lot. So I don't think gold breaks down. I'm just not yet sure that it's going to break to the upside. Could be totally wrong. Another day, and all of a sudden, everything breaks loose, and we've got gold up at the 1320s or something. But so far, I don't see that. And the dollar is holding really well. So now we can go to crude oil. And crude oil is trading up a little bit now. It's up $1.17. Oh, it's actually a lot more. 67.60. It's come off the leg D for a trough D in the daily chart. Just above it almost hit the 65.59 200 period exponential moving average. The stochastic has gone from single digits. It's close to getting to double digits. That's good. It's turning up. On balance volume's good. Relative strength has turned up. MACD is very poor. It's going to take a lot of work for that. And this ugly candle of yesterday, until crude oil breaks into the 70.50s, this is going to be a lot of resistance in the 68.80 to 69.30 area. But so far, held the 200 period moving average in the weekly chart. So we'll see where crude oil goes. The TLT, man, this is important. The TLT is up 59 cents. It cannot break out. It's in a rectangle formation right here. It's almost like gold. I've been talking about the chart patterns, how similar they are. Look, here's this wick to the downside, and it goes to a low of 112.62 and 112.64. So on the 5th, it goes to 112.62, rallies sharply to the 115 area, pulls back, and now it's trading between 113, was that 50-ish? Yeah, 113, let's call it 50, and 115. And at some point, there might be a little pop to the upside, and then it could come back in. Unless the TLT starts to trade in the 116.80 to 117.20 area for about 2 out of 3 days, that's where I think you're going to see the biggest drop in the stock market, because money will come out of stocks into bonds. So far, that really hasn't happened. I think I've covered just about everything. Now let's get to the questions. Boeing. Yeah, big deal. Boeing comes out with a fantastic report. How can they not have a fantastic report? Any company that's got back orders for the next couple of decades, I mean, really, how can they not report such good earnings? But look, it's way off the 394 high of October. It went right down to yesterday's low of 342.83. I think it's going to make an arch formation and come back down. And later on, you're going to find out how countries so quickly hold off orders. They say, okay, we're not going to make any orders. And in fact, the 37 Boeings that we were going to buy for 2025, for now, we're going to make them just 17. 13. And that's the way it goes. But I don't see that happening yet. But I do believe that's what we will see as we get the major top coming in. So Boeing is still in the lower area after making 394. It's at 362. I'm watching it closely. Would I short it? No, I think that they're much better stocks to short. And there's a story here with Boeing. At any moment, they can get a new order. It doesn't have to be taken seriously, but the market will take it seriously. So I just don't think it's necessarily what you really want to be looking at. Okay, next question is XLI. Well, I haven't looked at the XLI for a couple of days here. Oh, yes, I looked at it yesterday. Smashed to the downside, down 1.32%. It's down 95 cents at 70.78. Peak E in with a little doji candle on the 20th of September at 79.54. Let's type that in. 79.54. And of course, you think I can remember now. I think the 21st or something of September. I'll just put that in. I'll come back and correct it. And that was a major top in the daily. It was a major top in the weekly, and it's a pretty major top in the monthly. And that's got the, remember, what's my rule of thumb? Let's just see if I can do that right now. Let's go to the double top cup formation, double top, chapter 17. I should know these by memory. I've done this for 15 years on these things. Yeah, look at this. No, that wasn't, it was the double top, not double bottom, the drop back of channel 20, chapter 22 channel. So this is it. Look. When, in my rule of thumb, in a cup formation, double top, if the left side lip, that's the left side lip, to the base, gets taken out on the upside and cannot close 2 out of 3 bars, above the left side high, watch out, because if it comes back 1/3 to 1/2 of that entire distance between the left side lip and the left side cup bottom, there's a good chance you're going to retest the low. If you take out that low decisively, there's a real good chance you could have a 1-to-1 to the downside, and I've seen that multiplied twice or even 3 times. Oops, let's just go back to what we were looking at. What we're looking at, we're looking at the cup double top formation in the XLI, the S&P Industrial Select ETF, and it is so close to taking out the left side low of 70.03. The low right today is 70.38. It's like within an eye blink of doing that. And if it does that and it starts to close 2 months below that, 2 bars it should be, but let's call it months, this thing can go down this can go down to 65 very quickly. Please be careful. Any bounce would just be a retracement failure mode. Next question. Yes, UTX, what was the question? UTX down 3%, UTX down 2%. All right, UTX, we're out of UTX. Our major long-term buy is now down 3.5%. We bought it at 119.77. We took some off in the 120s. It went all the way to 144. It made the cup formation. It had a right shoulder failure. I'll talk about that in my webinar coming up on Tuesday night. And that's a cup failure pattern. And then it broke down, and it went from 144 all the way down to today's low of 124.26. Our stop, the last stop was, and I said I'm taking the stop, even though I said 122, because I want to see where this bear market goes. Will UTX survive and then make a really big turn? I didn't want to lose 3 points for nothing. It felt strongly that it was going to go lower. Comes out for fantastic earnings yesterday, and today's down $4.73. UTX, Triple M, you can just go on and on and on. There is very little that I like here that I would like to buy for the intermediate term, but we will start positions soon.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will
will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So, folks, there are things that are working here. I just had in the den, what was the question? Peak says, Basil, HSY working out real well for me. Thank you for this idea. You know, it's funny. I wanted to put it, in fact, I must look and see. I think I had it in my list of watch stocks, and I completely forgot about it. Then I remembered it, and I remembered it when it made the cup formation at a peak E. This is Hershey, trading at 109.36, up $1.65, up 1.53% on a day where the Dow is down 0.65, the S&P is down 1%, and I can't even see now where the Qs are. Qs are down sharper than that. So on the 14th of September, it goes to 106.76 peak E because the next day it plunges to the downside. And then what does it do? It goes down sharply. And I think we were talking about it sometime around about September, late September, and it was trying to form this base. The confusing thing was this spike to the downside. It kind of changed the pattern from a cup to almost like a rectangle. And then what does it do? Lo and behold, it has a fabulous move up. Gray leg A, then gray peak A, then gray leg B, which becomes gray peak B, because what does it do? It stalls underneath the previous high on the 8th of October at 106.54. Now, I think I looked at it just after that, and it was in the process of making this move here on the 10th, big plunge to the downside, and then a horrible candle on the 11th. And I left it alone because I thought, all right. And I thought, well, the MACD's good, but it's turning down. It's kind of, and the stochastic was rallying. I tell you the truth, I had other things on my mind. Believe me, this whole period of October has been fraught with a lot of looking at charts because there's been a big dichotomy between the last ones that were working and the ones that were already failing. So I did not see this move, but what I had said is if it can break decisively above 106.76, that's really going to be good for the weekly chart. And that monthly chart made slightly lower lows for a peak C1, C2, C3. So if there is a rally, it should get close to 115 and probably should go to a D after all this. But it's acting very well. That's a leg A. So what's the state? Oh, the statement is, would never have thought about HSY if I didn't subscribe to Opening Call with Basil Chapman. Oh, thank you very much. And Cody says, ride the Chapman wave. Well, thank you very much. Okay, let's get now to nitty-gritties. And what we're saying is that there's very select movements to the upside. Let's see if Procter & Gamble has held that big move to the upside it had the other day. Wow, look at that. Nice gap up. New leg C, so it's the defensive stocks, not defense as in Raytheon. Oh, certainly not Raytheon, but defensive, like a Procter & Gamble, like your old cookie cutter, like your chocolate Hershey's. those are the ones that are working here. And that's just typical of a bear phase in the market. That's what it is. And you can call it anything you want. Everything we're looking at now, Dow's down 160. This is bear material. Okay. Next question. So Paul mentioned about the VIX. I did mention the VIX yesterday, and Paul knows that. But what I wasn't sure, Paul, you'll have to write to me again, because you had said, thanks for addressing this email, but you missed the analysis, the effect of 3 inside candles. So you said yesterday, check out the 3 inside trades on the VIX index going on, but the title of your email was Buffett. So I wasn't sure how to put that together. But what I am looking at here is the VIX index is in play, and that's what we've been discussing for a while. And what do I mean by in play? It did not have that usual spike to the upside and within one bar give everything back and then go back below the 200-period moving average. This is a period that is politically, geopolitically, economically, and interest rate and Fed challenged. Now, let me see. Each one of those by themselves might not make too much of a fuss in the market. But if you multiply that effect, it is devastating, because folks don't have credence in what they buy. They just don't feel secure. And the pullbacks are 8%, 12%, 15% on a stock. If they're wrong, it's vicious. So over the last week, I think the general consensus, the public, my feeling is, I always try to get the feeling for the public, they're saying, uh-oh, this is just not good. What should I do? Over the last day or two, they've actually started whittling away, getting out of some of their things. That's why I called yesterday as just a mere another little the yields that went to 28.80, sorry, the VIX going to 28.84 on October the 9th, 11th. I should put the date. On October the 11th, I would just say to you that that is part and parcel of what we've got to expect. A lot. And maybe that's the earthquake to a certain extent. I don't think so. I think we still need a resounding sell-off and reversal once that goes through from very sharply down, closes sharply higher. Yesterday didn't close sharply higher. That's a big false if you understand the VIX index and how it works. If it did, we probably would have had a better follow through today to the upside. Yesterday's reversal at the end of the day down 100 something, down sharply in the S&P after such a big turnaround to the upside. That was not good. So the VIX at 22.42 is telling you triple digits. You got to be careful. You're going to have triple digit intraday moves in the Dow, very often triple digit closes, down closes, and the VIX, as long as it's holding in the 20s or 19 or higher, is going to be a big issue in allowing rallies to hold. And that's all you need to know. And I see no reason why you need to rush into stocks that you thought you missed. And now's the opportunity. No, now's the opportunity. Look at Amazon, part of my cash index. I typed Amazon instead of going to Amazon. AMZN. Look at this. Down 33. It's on its way in the H pattern to try to test at 1685. I can just tell you, if it takes that out with 1661, the 200-period moving average, that's not the issue for me. The issue for me is that it's Amazon. Amazon is the equivalent of Berkshire Hathaway, but as a functioning online medium. BRK.B. I mentioned this some time ago, saying I think that there's a chance that Berkshire Hathaway stock could be making some kind of a double top, and I just hope it doesn't make a hat-trick top, because that's going to be months before it gets back to the 220s. It's at 202, no big deal. It's down $1.71, testing the daily 200-period moving average, peak E, double top in the daily, peak D, double top in the weekly, and a monthly, this is really unusual, a monthly peak, a leg F, possible double top, if at any point in the next 6 weeks, by the end of the year, if Berkshire Hathaway, which is the real living economic benchmark with Buffett in every single thing, Look at the chart. Keep your eye on the right side chart, the monthly of Berkshire Hathaway. Now watch the change, and what do you get? Look at this chart in Amazon. Also having a very sharp red candle, but it's its first red candle. So I don't think in any way that Amazon is done. But I think that this could be a period, certainly in the next 6 weeks or so, fraught with anxiety. And 1562 is the 14-period moving average. I wouldn't be surprised if that gets tested. Basil Chapman,
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
This is the fall in Massachusetts in the New England area. This is a cartoon from my CD introducing the Chapman methodology. There's this woman, she's walking along, it's kind of fall, and there's this leaf just coming down. You see, flip, 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 flip. This one leaf comes down, and she looks as it lands on the ground. She says, I hope that wasn't a market omen. Yeah, we've got to be real careful in the fall. They don't call it the fall for nothing. Couple of questions, right? Let's get to XLB. XLB is in fact, oh, that was the peak D in the cup formation failure on the right here in the 2-minute chart. All right, let's get to XLB, and then we'll do the other one that's requested. XLB, so what's the question? Julie wants, oh, 1.5, 1.4 down. It's actually 1.84. XLB, the S&P materials, look at this 1-to-1 smash to the downside in the monthly chart. This is just not good news at all. Yep, there could be counter trend bounces, but it's going to say it has to form a base and take quite a while. XBI is what? XBI is S&P Biotech. Oh, XBI. Have I ever looked at this? It used to be BBH I looked at. The XBI, oh, look at that candle. That's already a very sharp second month down. And this is the S&P Biotech. BBH is the one that I always used to look at. But the, yeah, let me just do this if you don't mind. IBB is the one, the NASDAQ one that I go to. Look what's happened. It smashed. We're out of this. We've had it for a long time. We've made some money and we're out. We're gone. And this one is the one that has the most unusual pattern because it went from 133.60 back in July of 2015, smashes down to 80, rallies in an up channel, in the most perfect up channel in the monthly chart. I've never seen this. It goes to peak A, B, C, D, E, and even an F and a G before it smashes, and now it's going to test. If it breaks the 10, it's at 105.90. If it closes on a monthly basis below 104, let's make it 103. I give it a little wrong. 103, not good at all on a monthly basis. Yeah, everything that was working before is just not. Look at the SMHs. SMH is right now down another $3.21. Going to a low, below the left side low. Look at that monthly chart. This is not a good sign. Rallies, be careful. Just have patience if you want to buy. Basil Chapman, check out for my webinar coming up Tuesday night. Check it out.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.